Alrighty, good morning, everybody. It is Friday, February 14th of 2025. Let's go ahead and jump back to yesterday's open. I have a little lesson or something I want to talk about in terms of trading a breakout. Okay, so if you recall yesterday, we were talking about, if you were in our pre-market, which was broadcasted live for anyone in the world to watch, we were watching the fact that every time the bears pulled the market back lower, it kept holding from 50% of the week before. And so every time we got bearish clues, they came down, they came right to 50% of the week before and launched off. And then 2 days ago, if you remember back on Wednesday, we sold off again, found a low at the 50% of the week before, and then came right back out. And we have this weekly bullish stuff going on off the major lows from January. We started to get a potential bullish signal on this weekly time frame. When we came into the beginning of this week, we talked about that potential, and then price was holding again up around 50% of the previous week here. And so when we came into the market yesterday, before the market broke out, right? So let's zoom back to the way the market looked before the market opened. We were sitting right, I want to say, just confirm. Yep, we were sitting right inside of all this chop over here. And we talked about, again, seeing that the bulls were recovering, and they were recovering right off the major 50% area, or actually right over here coming into this week. And so there was a clue that because the bulls kept defending the pullbacks, and because we did have, again, daily bullish clues from the lows and weekly bullish clues from the week before, and holding above 50% of that previous week was that clue for the potential strength on the bullish side. So we talked about, again, the fact that we were stuck inside of all this chop for 1, 2, 3, 4, arguably 4 strong days of back and forth action in here. And we really needed to see a breakout to have a strong conviction either way, because there were some good bearish clues from highs. We kept seeing the bulls recover from the pullbacks, and we had bullish signals on higher time frames from the lows. So I told you guys, if we can get a break through the highs, through 61.05 half, that was going to be our clue to jump on the long side, right? That's basically what we talked about before the market opened yesterday. If we could get through 05 half, that was our major sign for a potential to push to new highs compared to the high of Friday of last week there. And so when we came into the open, what happened? We're going to go down to the short time frames now. Now that I've qualified that this area from about 60.50 down off these lows over here up to that 60.90 area, 60.95 was the major level there. It was all chop. And ideally, we wanted to get up through there and then up through 05 half, the major level up here, to have faith in a continuation to the upside. So when we came in yesterday morning, the market was just kind of meandering back and forth here. And I'm going to highlight this whole section from, again, right around 60.50 up to 60.95. That was the chop zone. So if we go back to my 60-minute chart here, this is 60.50s up to that 60.95 high level, right? That's the block where it was chopping. And we even drew in this little trend line and said, ideally we want to kind of pop through there, obviously get through the high the day before and get through 05 half. So there you have it. That's that box that I just highlighted. And so when we opened yesterday, I was just being patient inside of this area. Now I do want to highlight, just for anyone who is new here, the high of the morning and the low of the morning to the tick was our roadmap levels here. So we did open, come out of the New York open there and come right to the back end of the first roadmap level with a little bit of bearish divergence. And then we sold off right to that next roadmap level. So there actually was a short out of the open if you wanted to try, and a long out of the open if you wanted to try down here and you would have nailed the two major rotations out of the open. There also was a perfect textbook pullback into the VWAP, 50% retracement of this bullish leg out, bullish divergence on the second test and on the first test, and then obviously it did pop out and come right to the next roadmap level, which is that 94 level that kind of highlighted the high end of the chop zone. So you did have discrete rotations off these roadmap levels where you could have gotten in. The issue was I didn't want to do anything. And if you remember, I typed into the Twitch room that I'm not really doing anything over in here. I know we just hit the high of the day and the low of the day. So maybe we were kind of over here. And I said, I don't really want to be doing anything over here. It's a little too choppy for me. So I didn't really place a trade until we came all the way out and actually broke out and got long off 05.5. That was the major level I just mentioned. But just want to just kind of note here that there were some very, very good opportunities where you had basically zero risk on the S&P. And if you did short 80 off 88 there, you did get yourself, 15, 16, 17 points to the next area where you want to take profit. And then here, if you took this long, that was the low of the day. It never came back. So once again, the low of the day yesterday, and then the high of the day, if we zoom all the way up to the high of the day, was our roadmap levels to the tick. See, there's the high of the day yesterday. We came right into it, got a bearish divergence and pulled back. So we still basically nailed, if you took the low of the day long, you had basically no risk, and then the market never came back and you made, maybe however many points to the upside. And then at the end of the day, if you shorted the roadmap level up top, you got yourself that little fade at the end of the day, right? So anyway, I digress. I want to go back to how I ended up trading this. So if we're looking at this chop range here and price is starting to push up to the top end of it, what I'm looking for there is for the market to actually break out from there so I can get long on a pullback. So I want to look at some of the opportunities you had yesterday to actually do that. And the first opportunity I did not take, and that probably would have been the best trade you could have taken for the day. So the best place to get in, obviously, was the low of the day, but we were inside of the chop. It was very, very ambivalent in here, and we had arguments for both sides. So it was much harder to have conviction to try the levels on the screen. But once we actually finally broke out through the morning chop, your first opportunity there was this textbook beautiful kiss of the top end of that 95 level. So this was 94.75. This was the top end. If you zoom back to the last 4 or 5 days of price action that we kept coming into and failing off of, and then the high the day before, you can see they peaked through into 98, and then we ended up failing back down. So now that price, and you can even see here, as the bulls were starting to chug along, they came right to that 94.75 or 94.5 there. There's a bearish divergence, peak above, and a pullback right off of it, and then they came back and pulled back off of it again with a bearish divergence just a couple minutes later. So there was something going on there. We know there is something going on there. There's a reason we have a roadmap level there. And when they broke out and pulled back, that is the very opportunity that I'm talking about here. And that is trading, waiting for a breakout of a specific range in the market, and then looking for entries once that breakout starts to happen. Okay, so that was really probably the best trade of the day right there. We get our breakout through not only the high of the morning session and the overnight session, but it breaks out through the high the day before, pulls back right into the very level you would expect to hold because it was resistance. And if we were to scroll back to previous price action, we probably have a bunch of other major swing highs right there. So again, good support area. It's a reason our roadmap level is there. We've got the 200 real close. You put your entry in on the roadmap level. Ideally, you got filled. Sometimes you don't get filled because it doesn't go through the level, which is a real pain in the butt. But perfect, picture perfect kiss of the level to the tick. You had some divergence from there. You had the previous swing highs. We know there was edge to this level. And again, zero risk if you got filled to the tick there, and then you got yourself the continuation to the upside. Okay, so beautiful opportunity there. Now, to be honest with you, I don't know if I was looking at the screen over here as the market was starting to really break out. But when we got through 05 half, that was kind of, this was like the penultimate level right here, 95 important. But the ultimate level we wanted to see the bulls get through was 05 half, right? That was the major one. So when we finally broke out through there, and again, I don't think I was watching the charts when this happened. I do get up and make some coffee here and there and go out and get some fresh air. So that might have been when that happened. But when I saw us pulling back into 05 half, this level, my friends, I mean, let's just take a look here. How many times have we come into 05 half and gotten these major rotations? Like all of the week before, Friday, Thursday tag, Thursday tag, and then finally a bunch of trouble, and then they break out on Friday to the new high, test the major roadmap level, and get the failure. And this is when we started getting all the bearish clues as price was kind of pushing up into these highs, right? So that's not surprising. We got the peak above and then failed. But anyway, I digress again. So 05 half, major resistance until we kind of peak through it and fail. If we go all the way back to weeks before that, we come the gap zone right there, 05 half, major swing high, the major high of January 28th, 05 half. On the 29th, we peak through it, and then we come right back to it and fail. And then even on the 30th there, we do peak up into it and fail, and then eventually we break out through that area. And we back here, we pull all the way back, 30, 40, 50 points, come right to 05 half. Yes, it peaked through by 2 points and then bounced out. So there's a whole lot of crap going on right at 05 half. So not only was it a roadmap level, and the reason it's a roadmap level is because of all of that relevance, we also had the 200 coming right up into it. We were breaking out through the range that we wanted to break out through. Again, this was probably the sexiest entry. And then I put the icing on the cake here as we're pulling back into this level, and I literally got to my charts as we were pulling into it. So I had like 10, 20 seconds to actually put my entry in. I noticed on the 3-minute chart, now, this is something I use. There's a reason it's up on the screen every day. As we were pushing up, pulling back into that level here, this is what my 3-minute chart looked like. Let's see if I can pull this over. We were pulling back into 05 half right there. This is what my 512 looked like as we started to inch down into it. I've got divergence here on the 512. Let's go ahead and zoom it in. Big divergence there. And on my 3-minute, as we pushed into the level here, it wasn't closed yet, but look at the major divergence that was showing up on the 3-minute chart. That's some extreme divergence. Now, doesn't mean it has to hold. There's a good level and there's a good signal. Doesn't mean it had to hold. They could have ducked right on through, and I could have taken on a stop. But what happened here? Let's just zoom in and take a look. I got filled 05 half. I took literally 2 ticks of risk, and then I got a little scalp. Now, did it actually follow through for a 30, 40, 50 point push? No, but I got myself a really healthy trade off 05 half there, getting my 2, my 4, my 5 pointer, making over 10 points total. Took on half a point of risk with those 3 contracts, and that was it. So that really, in my opinion, this is how you trade these breakouts. You have all of this trouble from 95 down to 50. We play around inside of that range out of the open, admittedly holding our levels nearly perfectly. And then finally, once we break out, you go ahead and you get in on one of our textbook entries, like a kiss of a level with divergence, testing the previous resistance. Same thing up here. Previous resistance, major resistance at 05 half, testing a level, divergence on the 3-minute and the 512, and you get in. Now, of course, when I entered, it was that last little whimper of 6, 7, 8, 9 points and then they did begin a pullback. So I only got a small trade out of it, and then they did get a deeper pullback only to bounce right back off our roadmap level at 89. So there were on the way down here, just to kind of move away from our strategy of getting long on pullbacks after we break out through a range. We did have some very notable little opportunities inside of all this stuff here. Again, if you were looking for a short, the back end of the 200 on the way down, and then they kissed the back end of the roadmap level there. So there were some short opportunities here. If you were thinking that maybe this was kind of the end of the push, there's the test of the 200, test of the 200, and then there's the back end of that next roadmap level. Got a little messy here, but then eventually we get the continuation down, hits the 200, and then again the major low going into the afternoon was the roadmap level, and there was a picture perfect divergence when it was testing into that level. So that could have been a counter trend type of trade. I mean, in terms of the overarching trend, it would be in the direction of the bulls, but in the short time frames here as we're selling off, kind of a counter trend type of situation. But if you look at that pattern, it doesn't get much clearer than that. Big bullish divergence, testing into a major roadmap level. Again, if you don't get in off the level, are there some opportunities to get in on the pullbacks? Yes. We hold a major roadmap level, and this was right around 1300, right around 1 o'clock Eastern. So it wouldn't be surprising if there was actually a nearly perfect divergence as well down off that area, and there was. So as we were pulling back into that next roadmap level, right here at 89, look at what your 3-minute time frame looked like. Maybe I can turn off this stuff here and just look. We've got this push into the level, and where is our RVI when that happens? Way up here. So your 3 minutes give you the bullish hint as we're testing the level. Your 512 gives you that beautiful reversal pattern off the level. How much risk did you take? Less than a point. And then that was, I believe, the low of the pullback that led to the new high. So again, great, very low risk opportunity. And then if you missed it, like I said, you got the pullback to the roadmap level in the FMA right there for an opportunity to jump in on it and get your first profit, hopefully at 05, because then it kind of almost pulled back to your entry. And then eventually you can see we break out, but it still kept having trouble at 05 half. I mean, how many times have we come into freaking 05 half and gotten a picture perfect rotation, right? So as it kept trying to get through 05 half again, it just got weaker and weaker, slower, lower and lower highs. And then this, in my opinion, would have been, if I was watching this, might have been tempted maybe with smaller size to give this a try, because look what it did. Bearish divergence on the first test, bearish divergence on the second test, bearish divergence on the third test, and then we start to fail. So all this weakness in here might have been a good clue to try a short. You know you're wrong, probably at 07, and you try to get the pullback. But as you can see, only gets to the previous daily high with a bullish divergence, and then they pop out. So a good little scalp, and then we get the continuation. And on the way up, let's zoom this out and speed it up now that we're running out of time. On the way up here, it was so aggressive they couldn't even get back to the FMA. It missed it by a tick. And then eventually here, this would have been your next entry point, the most aggressive thing you could have done on the way up there. And you would have taken 2 or 3 ticks of risk and got the continuation to the high of the day eventually here. So if we were to just kind of speed it up here to finish this out, we break out again. Notice 05 half is the major trouble. Even though we got through it earlier in the day and pulled back below it, it became trouble. Again, not surprising. And then we finally get the continuation. And you can see here that all these pullbacks to the FMA, you could have gotten in with limited risk, even off of the roadmap level. And then it kisses the 200, comes up to 34. And this was the high of the day, where again, finding some bearish signals off of a major roadmap level, peak to a slightly higher high, peak to a lower high on RVI, and you get the final pullback of the day, hopefully giving yourself 5-6 points. So that's how the cookie crumbled yesterday. I think overall, just absolutely beautiful price action, right? It doesn't get much better than that. So now let's go into the overnight session here, where I did try a trade a little bit earlier. We have, okay, in the overnight session here, just to kind of summarize this up, the pullbacks never got through the previous daily close, and there was no hopeful on the screen at that point. So they pulled back and held the previous daily close basically to the tick in some instances, and then they break out, and where do they come to? The next roadmap level, where we basically get a divergence. Now, what I want to show you here is you kind of have this 512 divergence, but more importantly, if you had your 3-minute chart up to be kind of comparing the two, this was the pattern right here, right? So if you were here a couple hours ago, really early in the morning, you had that typical peak through a level, slightly higher high, RVI printed the lower high, the 512 here, again, kind of showing, or actually, wait, where am I doing? What am I doing? Wrong area. So I'm thinking of this right here, sorry. So we get this peak up through the VWAP. You don't really get a beautiful 512 divergence there, but that 3-minute, and this is what I was trying to say, is what would have highlighted you to the divergence and the trouble, and that's a very typical peak above and fail with divergence pattern, bearish pattern. And again, whether or not you got filled here and got in, I don't know. I'm not arguing you would have, but that did lead. If you eventually got in off the VWAP here as it fell down, you got yourself another 10 points to the downside here as we came into the open this morning. So that was really, really, really sexy in my opinion. And then as we came into the open here, you can see on the pullback from the roadmap level up top, the high of the overnight session, we did pull back and bounce to the tick off the close again, which was the support out of the open there. And then they, again, couldn't get through VWAP. Another typical bearish type of scenario, 50% retracement of the sell-off. And that brought us down to the low of the morning, which obviously wasn't quite off a roadmap level. But on the way up, once again, bearish divergence off the roadmap level here. I actually watched this happen in real time, but it had already started pulling back. But there was a bearish divergence, fast moving average, bearish divergence, bam. So you got a little scalp, and then I tried this right here not too long ago when, just take a look at where my entry was first of all. We have all this support from the previous daily close. We come back to it and kiss it to the tick in the middle of the night for the bounce. And then as I was looking here this morning, we were coming right back to that ledge right there. It was the 200 moving average. And as we pushed up into it, oh, look at that. Divergence was starting to form. Now, it could have pushed all the way through into the VWAP. I was willing to take on that risk to see if we could hold this ledge of price and get a pullback. And sure enough, I got a decent trade out of it, but it came back. So it didn't push out for my runners. As you guys know, I like 10, 15 points if it keeps going. So I didn't get that, but I got a nice scalp. And now as we come into the open here, what do you know? We're pulling back into the 200 for the bounce into the next major roadmap area. So that is the major review. Now, there's not much to speak about today, but we're going to jump into the higher time frames and see what they have to say.